President Donald Trump's decision to increase tariffs on imports from the Lao People's Democratic Republic or Lao PDR is part of a broader strategy aimed at addressing trade imbalances and protecting U.S. industries. On April 2, 2025, President Trump announced a 10% universal import duty on all goods entering the United States, with significantly higher rates for 57 specific trading partners. These elevated tariffs were described as reciprocal, intended to mirror the perceived trade barriers that these countries impose on U.S. exports. For Lao PDR, this policy resulted in a substantial tariff rate of 48% on its exports to the United States. The administration's rationale is to encourage fairer trade practices and reduce the U.S. trade deficit by imposing tariffs that reflect the barriers U.S. goods face abroad. However, the methodology used to determine these tariffs has been criticized for being based on inaccurate trade data and lacking economic justification. Critics argue that such sweeping tariffs could lead to increased consumer prices in the U.S., potential job losses, and strained relations with affected countries, including Lao PDR. Additionally, these measures risk escalating into broader trade conflicts, potentially harming global economic growth. The main reason is to attack the economic bases of China that investing in the territory of Lao PDR. These are the goods exports of Laos to the U.S. In 2023, the Lao People's Democratic Republic or Lao PDR exported approximately $306 million worth of goods to the United States. The primary exports included optical fibers and optical fiber bundles, valued at $108 million, leather footwear, amounting to $35.9 million, knitted hats, caps, totaling $31.6 million. Now you can see that these goods are owned by the Chinese investors. They invest in Laos because of cheap labor costs. Mainly, it prevents the tariff increase from the U.S. It is believed that most of them will shut down if there are no solutions to the tariffs issues. It means that 90% of Lao laborers working in these factories will be unemployed. Look, if President Donald Trump increases tariffs on imports from Laos truly, it could have several significant impacts on the Lao economy. Number 1. Decline in exports to the U.S. In 2021, Laos exported goods worth approximately $67.45 million to the United States. An increase in U.S. tariffs would likely make Lao products more expensive and less competitive in the U.S. market, potentially reducing export volumes. Trading economics. Number 2. Economic strain on key sectors. Laos's economy relies heavily on exports, with significant portions coming from sectors like textiles and agriculture. Increased tariffs could lead to decreased demand for these products in the U.S., adversely affecting production and employment within these industries. Number 3. Potential for trade diversification. Facing higher tariffs, Laos might seek to diversify its export markets to mitigate the impact. This could involve strengthening trade relationships with neighboring countries and exploring new markets to reduce reliance on U.S. trade. Number 4. Broader economic implications. The Asian Development Bank's chief economist, Albert Park, has indicated that broad U.S. tariffs could significantly slow both U.S. and global economic growth. Southeast Asian nations, including Laos, facing high tariff rates may experience economic challenges, potentially leading to capital outflows as foreign investors retreat from riskier markets. In summary, increased U.S. tariffs on Lao imports could negatively impact Laos's export revenues, strain key economic sectors, and prompt the country to seek alternative markets to mitigate these effects.